Hey guys, welcome to another episode with me, Shashank Udupa. And in this episode, we're going to talk about a very new, interesting concept. And that concept is called ESG investing. Now, we recently saw that Economic Times came out with an article about ESG investing, and a lot of people are trying to understand what this is. So we thought it's best to make a nice video about it. And in this video, I'll tell you what are we going to do, right? We're going to talk about what ESG investing is, what are the different type of funds that are doing ESG investing in India, how to use ESG screener to find good companies for your growth. And we're going to look at all of this in the coming segment. So it's a new concept. It's a lot of knowledge that you're gaining from this. So I'll see you in the next segment. Now, what is ESG investing? So let me tell you what the full form is. ESG investing basically means ESG stands for environmental, social, and governance, or corporate governance or governance. Basically, a company is called ESG compliant or good ESG company if it satisfies all the above three conditions, which is environmental, social, and governance. And it has good benchmarks on it. Now, let's look at each of the factors in more detail. If you look at the first factor, which is environmental factors. Now, it is very important for companies to adopt these environmental factors. Like, for example, they go a greener route. They use less pollutant things that actually pollute the entire ecosystem. Eco-friendly practices and products that are adopted across the industry, that comes under the environmental factors. And that will not only help the company right now, or not only help the environment right now, but also help the environment for future generations. And we have seen this happening with a lot of different companies saying, carbon emission zero, we're going to be carbon emission zero, net zero. And a lot of people moving towards this, non-exposure to the environment, bad exposure to the environment, they're stopping in their company. Now, the next one is S, which is known as social. Now, what is social? Social basically means how the company manages its relationships with its customers, with its internal employees, and with the communities that it creates. Now, that's very important, right? Because a company should be good to its employees, how it manages conflicts between employees, how it takes care of its own community, and also how it deals with customers, even suppliers. So S comes under that domain. Apart from these four things that I mentioned, S also comes under CSR. CSR, which is basically means corporate social responsibilities. So S looks at how a company is doing what kind of CSR activities, how is it helping the society back. So that is what S is. Now G, which is the final one, is called governance or corporate governance. Now corporate governance basically means a company is judged by the business ethics that it actually works in that sector. So how is it being good to its employees? How is it being transparent about everything that it is doing? Is it being good to all its stakeholders? Are all the stakeholders being treated fairly and have with full respect? Everything is transparent and there is no unethical business that is happening. That is what G stands for. Now, what is the logic of this? You might be asking, okay, you've explained what ESG is, but how does that work in this whole context? How does that work with companies? Now, it is understood that if a company is ESG compliant, that means it has less of these issues. If the company is, doing really good stuff in the E segment, which is environmental, it is very good with its S segment, which is social responsibility to the world, and it is also good in the business ethics, which is the G segment, then the company might not, get exposed to a different kind of risk, which might come from these three segments. So what usually the understanding is that an ESG compliant company, a company which is good with the ESG element, usually has less risks because it is unlikely to be affected by any of these segments that might come and affect it in the future. And if it affects the company, it affects your stock price as well. So a good ESG compliant company is good for you. Now, there's another study that was compiled by MSCI Research found that the companies who did well in the ESG sector had a low cost of capital. Now, what is a low cost of capital? Low cost of capital basically means the cost of raising money either by debt or by equity. The lower the cost of capital, the better it is for the company. So a company that is ESG compliant and good according to ESG standards can go out and raise money quite easily. And it is very simple to understand. See, for example, if a company comes and says we want to do a new offer where we raise a lot of money through debt, or we're doing a new FPO where we want to raise new money from equity. Now, if the company is unethical, me and you will not want to invest in a company that is unethical. But if you look at, there are so many companies that have a good branding around it, that has a good image around it, I would more likely to go buy or participate in that particular fundraising. So that is why ESG is very important. Now, investors, people like me and you, can use ESG as a screener to find out good companies with less risk and more likelihood. There's also this belief in the market, which is not I don't know, there's no confirmation on this, but there's also a belief in the market that ESG compliant companies will eventually gain a lot of market share in the future. That means they will grow quite significantly. But again, there is nothing to back this claim. There's no evidence to back this claim, but there is a logic behind this belief. Now, in the next segment, we will look at how ESG works in India. Okay, let's look at what's happening with the Indian segment. Now, let's look at how ESG in India is being played. Now, in the last 5 years, there's a Nifty ESG index. Okay, there's actually an ESG index. In the last 5 years, the ESG index has performed much better than the Nifty 50 index as well. So, if you compound it annually and if you look at the last 5-year returns, the Nifty ESG index has given you a return of 14.91% compounded annually, whereas Nifty 50 in the last 5 years compounded annually has given you a return of 13.6%. Okay, so that means ESG is doing much better. Now, under this ESG umbrella, there are totally 10 funds available in India right now. And out of that, the oldest fund is SBI Magnum Equity ESG Fund. Now, these funds basically look at those companies that are adhering to these ESG, which is environmental, social, and governance principles. Now, some of these funds also have allowance for global stocks, because ESG is not only particular to India. ESG can be looked at from a global view or global angle as well. So some of these funds also look at global stocks. Some of these funds are also passive funds. Some of them are active funds, and each of them have its own market cap to play around in India. Now, let us look at some of the methodologies for investing in ESG stocks, and let's see how we can apply that to the stocks in India. Now, what we'll do is we'll go through how we found these stocks, how are these stocks even being formed, how are they coming as ESG compliant, and then we will look at some few stocks in the particular segment, and I will show you how ESG is not calculated, but I'll show you how ESG is done, and how you can see it in a particular stock, whether it's ESG compliant or not, and why it is so important to choose. So the next segment we'll look at that. Okay, in this segment we will look at the methodology of choosing ESG stocks for this example to teach you how the ESG works in this sector. So what we have done is, first we went through the top 10 holdings of all the different funds in the particular sector, all the ESG funds. We went inside, found out what the top 10 holdings were. Apart from that, we also looked at the stocks that are there in the current ESG index, which is Nifty 100 ESG index, and we have S&P BSE 100 ESG index as well. So we looked at stocks from that angle. Then we looked at something else called as Sustainalytics. Now this is very important. Listen to me. Now, ESG risk ratings is being done by a company. Okay, there is this thing called Sustainalytics, which is actually a MorningStar company. It is one of the leading independent ESG provider, and it assesses all the corporate governance, research, ratings, risk, everything. It matches and finds out what a company looks like from the ESG angle. So Sustainalytics does that. Now, the firm gives a ESG risk rating or a ESG risk score for each company. Now, a lower score will indicate that the company is less affected by the ESG risk, which is good. But a higher score means I have more risk to all these ESG factors. We want lesser the better. Now, you might ask, how does Sustainalytics find out the score, or how does it mark the score? Matlab iska kya hai? Now, how does Sustainalytics do this? Is the first thing that they look at is exposure. How exposed is a particular company to ESG factors? How exposed is it? Is it possible that this company might, have environmental issues? Might have social or governance issues? Possible. It might be exposed to all this. So the exposure rating comes into that. That's the first parameter. The second parameter they look at is management. Okay, chalo that I have been exposed to this. Okay, I have a company and I have gone through this ESG problem, and that is something that is affecting me from a governance standpoint, which is G. Now, they look at how this company has managed such problems in the past, and how it has constantly managed this, and how the company has built a system around managing any kind of ESG issues. So if there is an issue that pops up tomorrow and the company manages it very well, then it won't be a big issue for the company going forward. It won't affect your stock price as well. Then the third thing it looks at is something known as controversy. Now, this is very important because we see a lot of controversies around different companies. So ESG also takes up this thing of, or Sustainalytics also finds out a score where controversy is a big picture. Now, controversy is basically, it means that what are the different type of controversies affecting the company and how severe it is. So they have a rating of 1 to 5. Now, if the rating is 1, that means it is not that severe, this controversy. But if the rating is 5, and we have seen some companies where the controversy itself pushes the share price down, that means it is severe and it is at 5. Now, looking at all these factors, we found some companies which have an ESG score of less than 20. Okay, we found companies that have an ESG score of less than 20 in India. Now, using that, we arrived at these stocks. I'm putting it on your screen. We arrived at these stocks with a score of less than 20. Now, what we're going to do is just to analyze by ourselves, what we're going to do is I'm not going to go through all the stocks, but I will take one stock from each sector or one stock from each industry with these ESG scores, and we will start analyzing how these companies look at and how ESG analyzes on these companies. So I will show you both. Okay. In the next segment, with the first stock we will start is Hero MotoCorp, also known as Hero Honda before they rebranded to Hero MotoCorp, and it is India's first motorcycle manufacturing company. Now, Hero MotoCorp has a risk rating of 12.5 by Sustainalytics. Now, look at this amazing thing. Incidentally, among the 72 companies, automobile companies in this industry, 72 companies is tracked by Sustainalytics across the globe, and Hero MotoCorp is ranked number 1, which is a very proud sign for an Indian company. Now, let's look at the different factors how ESG is compared to. ESG is, remember we spoke about this, it takes into consideration the exposure, the management, how it deals with this to an exposure like this. It talks about the 4 different types of issues that might come up, and it talks about the controversy level. So from an exposure perspective, how exposed is Hero MotoCorp to ESG factors? The Sustainalytics has given Hero MotoCorp a rating of low. So the exposure to ESG factors is low. What does the management look like? Management is average. So the way they've dealt issues of ESG in the past is not strong, it's not weak, it's just average. Now, if you look at the top issues that might affect Hero MotoCorp in the future are basically corporate governance issues, business ethics issues, product governance issues, and human capital issues. Now, human capital will come to, because in the next segment, which is the high controversy level, or the controversy level that ESG takes into consideration. Currently, Hero MotoCorp is currently at a controversy level of 2, which is moderate. It is, remember, 1 is low, 5 is severe. Hero MotoCorp is at a level of 2. Why? Because in the past, there have been a lot of employee incidents, okay, with relation to labor concerns, okay, labor relations, or, something with relation to human capital, which we saw that might affect Hero MotoCorp, has been affecting this, and they have dealt with this in a very average manner, is what Sustainalytics says. And that is why Hero MotoCorp has a risk score of 12.5. Now, you understand how they're bucketing this in the company. So we'll slowly go into different companies, but you're understanding how they're bucketing this. First, they look at the exposure. Then they see how the management is dealing with some problems. Then they see the top 4 problems that might affect Hero MotoCorp. And then they tell you the current controversies that are going on. Whereas in Hero MotoCorp's incident, it is employee issues, labor relations that they have. So this is something that we looked at right now. If you look at the Hero MotoCorp's financials, I'm going to put it up on screen. Hero MotoCorp is a company that has a market cap of 55,000 crores, almost 56,000 crores. Their PE ratio is currently at 21.13. Their 1-year return is around 39.61%. Their debt to equity ratio almost negligible at 0.04, and their operating profit margin is around 12.05%. Correct? Now, this is why it is very important to understand how ESG works. Now, the next company that we will look at is called Tech Mahindra. Now, Tech Mahindra is an international MNC firm, and we all heard of Tech Mahindra. It's a subsidiary of Mahindra Group. It is headquartered in Pune, and it is also registered its office in Mumbai. Now, we all know it works in the IT sector and the business process outsourcing, which is the BPO sector. Now, Tech Mahindra has got a score, an ESG score from Sustainalytics of 13.1. It is ranked approximately 11th among the 786 global software companies. Not bad. It's ranked 11 across the 786 global software companies. Let's look at what their exposure is to ESG. So their exposure to ESG for Tech Mahindra is quite low. Let's see how the management is dealing with these factors. The management, the ESG management which Tech Mahindra does is quite strong. So Sustainalytics has given a strong rating for management. That means the management is very strong in figuring out and handling and dealing with any kind of issues that might come with Tech Mahindra or into Tech Mahindra from the ESG angle. Now, what are the 4 things that might affect Tech Mahindra? One is corporate governance, which is, are they business ethical or are they transparent about everything they do? Then human capital, because IT services companies have a lot of employees, so this might affect issues. It might be an issue for Tech Mahindra. Product governance, which they have with the different products that they're currently building. And most importantly, data privacy and security, which might affect Tech Mahindra. So these are the 4 things that might affect Tech Mahindra. Now, if you look at the controversy level, Tech Mahindra stands at a very low, 1 rating it's got. Low, very low, nothing. But the problems that they have been facing, which is the contributing events to this controversy, are business ethic incident, which has happened in the past with respect to bribery and corruption. And the second thing again relates to employee incidents or labor relations. So these are the things. But from an overall perspective, Tech Mahindra looks really good from an ESG angle because they have low exposure, they're quite strong with the management decisions, and the controversy level is very, very low. Now, if you look at some of the financials of Tech Mahindra, they're currently at a market cap of 92,000 crores, P ratio of 20, their debt to equity ratio almost negligible at 0.12, operating profit margin at approximately 18%, and their 1-year return is 90%. Very good, right? Awesome. Now, let's look at another company which all of you guys like and all of you guys might have heard of in the recent past, which is Adani Ports. Adani Ports and SEZ, which is Adani Ports and Special Economic Zone, is Indian. It's a company based in India, which is a port infrastructure company. Now, this company is engaged in business of developing, operating, and maintaining port and port-related infrastructure facilities. Okay. Now, Adani Ports by ESG or by Sustainalytics has an ESG risk score of 13.7%, slightly higher than Tech Mahindra. Let's look at how the company has dealt with exposure management and other factors. Now, if you look at exposure, Sustainalytics has given the exposure to low for Adani Ports. Okay, Adani Ports exposure is quite low. From the management, how good is it by dealing all this? It is given a strong rating, so it deals in a very strong manner. So that is good. What are the 4 different types of things that might impact Adani Ports? Are basically corporate governance issue, bribery and corruption, which might create a big issue because it's in the port area. Now, occupational health and safety, because if you're working in the port area, it's quite dangerous, so something might happen to their own employees. And the 4th thing that might happen is land use and biodiversity, right? Because you are dealing with flora and fauna, which might create an environmental issue going forward, and that comes in your E of ESG. So that these are the things that might be an issue for Adani Ports. Now, if you look at their controversial rating is at 5. Okay, all the companies we saw is at 1 and 2, which is moderate, low, but this is at 5. And 5 means it's the highest rating, it's severe. And what is the incident that is giving this? It is land use and biodiversity. And Adani has been in the news in the past with respect to a lot of controversy. Now, when controversy happens, we have understood that the stock price fluctuates, might go up, might go down. Most of the time goes down because it is a risk to us. So that is why ESG comes into the picture. So if we understand this and I'm like, okay, this is very high, the controversy level, this might affect my portfolio and it might go up and down. That is when I would look into how ESG works. Now, if you look at some financial ratios of Adani Ports, the market cap is at around 1,56,000 at the time of making this video. The PE ratio is 31.43. Operating profit margin very good at 69.2%. Debt to equity ratio little high, 1.17. And their 1-year return, because Adani Ports has been going up quite a bit, it's at 188%. But look at the company, if you see an overall view, the exposure is low, the management is strong, but the biggest problem is the controversies that they currently are at with the land use and biodiversity element. So that is very important for you guys to understand. Now let's look at another industry, which is called Page Industry. Now, Page Industry is basically an Indian manufacturer which is in the textile space, which is an Indian manufacturer of innerwear, loungewear. It has exclusive license of Jockey in India, Sri Lanka, Nepal, Bangladesh, UAE, Oman, and a lot of other countries. Now, if you look at their ESG risk exposure or risk score by Sustainalytics, their ESG risk score is at 14.8, slightly higher than the other two, but it's at 14.8. Now, if you look at how the exposure to ESG factors, it is quite low. If you look at how management is dealing, it is average. It is not strong, but it is average. Now, the top issues that Page Industries might face are corporate governance issues, business ethics issues, human rights issues with respect to the supply chain, and human capital, because they have a lot of people working under their franchisee elements. Now, if you look at their controversy rating, they have a controversy rating of 0. They don't have any controversies. Have you ever heard Page controversy? They don't have any controversy. They have no contributing events to the Page Industries controversy also. So from an ESG perspective, it is quite good. Even the only problem here is that the management is not strong in dealing with issues of past ESG incidents. But currently they have nothing. So we come to the financials of Page Industries and let's look at how that is. So if you look at Page Industries, the market cap is at 32,200 crores. The P ratio is extremely high. It is currently at 125.81. If you look at their operating profit margin, it's currently around 16.64%. The return on equity ratio, ROE, is at 43%. Debt to equity ratio is slightly lower at 0.16%. And the 1-year return percentage is currently at 69.72%. The next company that we would come to in a different sector is called Titan, and we've all heard of Titan. Titan has a diversified presence in watch, eyewear, jewelry. The company has been the largest jewelry retailer in the country, and jewelry division contributes to 83% of the revenue for Titan. Now, let's look at how their ESG score looks like. So, Titan has an ESG score of 15, okay, slightly higher than the other two. Titan has an ESG score of 15. And if you look at their exposure and how the management is dealing, their exposure is low, management rating is average. And what are the 4 problems that might face Titan Industries? Again, corporate governance, human capital, business ethics, and human rights with respect to supply chain. Now, if you look at their controversial statements, or if you look at the controversy level, they don't have any controversies. Again, no contributing events, nothing in the controversial statement. If you look at some of the financials of Titan, you will see that it is a very big large cap company with a 1.2 lakh market cap. Their operating profit margin is at 7.94. Their P ratio is quite high at 128. Their 1-year return is 57% right now. That was in the Titan industry. Now, if you look at something in the pharma space, and we want to look at that also, you see Divis Labs. Now, Divis Labs is a company in India that produces API, and we had done a video just recently about the pharma sector, and API means active pharmaceutical ingredients, and it also works in the intermediate space. It's headquartered in Hyderabad, Telangana. Now, the ESG score of Divis Labs is at 18.5. Now, let's look at how the exposure and the management comes into the picture, and also let's see the controversy level. Now, the exposure to ESG factors are quite low for Divis Labs. Management rating is given average, so it is not very strong in dealing with issues, but not very weak in dealing with issues. Now, the biggest problems that might happen with Divis Labs or might affect Divis Labs from ESG perspective is, again, human capital, business ethics, corporate governance, and product governance, because they're dealing with a lot of products internally. Now, if you look at their controversy rating, they're currently at a controversy rating of 2. Okay, that is basically what are the contributing elements here for this controversy. So there have been issues with business ethics that they have dealt with the past, and there are also some issues with respect to society because they have had some community relation incidents. So the ESG, where G and S have come into this element, that is why they've got the controversy rating of 2. If you look at their financials, their market cap is at around 1 lakh crore, P ratio of 56.55. Operating profit margin at 39%, debt to equity ratio of 0, and 1-year return of 74.25%. Now, let's come to something in the real estate sector. Now, we finished the pharma sector. Let's look at how real estate sector works. In that, we have a company known as DLF. Now, DLF is basically in the real estate sector. It is in the colonization and the real estate development sector. What they do is they acquire land, they build on that land, real estate. They also do planning, execution, construction, and marketing of different projects that they own. So they have an ESG score of 18.6%. Okay, less than 20 we're analyzing. So they have 18.6%. The exposure to DLF for the ESG factors are low. The management is being average in the way they're dealing with these issues. Now, if you look at the 4 things that might cause an issue for DLF, is corporate governance, human capital, product governance, and one interesting new thing is ESG integration into financials. Are they doing a lot of CSR? Are they using money to help the environment? So that is something that might affect them. Now, if you look at their controversy rating, it is quite low. It is at 1. The incidents that are actually dealing with this, or the contributing events for this controversy, is basically employee incidents with respect to occupational health and safety, because they're all working on construction sites, and the quality and safety even for customers. So it is basically around the safety issue. If you look at their financial ratios, the market cap is at 60,000 crores. Operating profit margin is at 23.73%. Debt to equity ratio of 0.17, quite low. for a real estate company, and 1 year return is at 84.82%. Now, let's look at another company which is in the financial services space, and that is called HDFC Limited. HDFC is basically Housing Development Finance Corporation. It is a leading Indian financial services company, has been around for a very long period of time, and they provide finance to a lot of sectors. They're there in banking, they're there in life insurance, they're there in general insurance, they're there in asset management, venture capital, realty sector, in education sector, deposits, education. They're there almost everywhere. It's like a conglomerate. Now let's look at how they have been, what rating have they got. ESG score for HDFC Limited is at 19. Okay. Their exposure to ESG factor is not low, it is medium this time. Okay, it is quite high. It is medium, it's not high, but it's medium. The way the management actually deals with this is average, it is not low. And if you look at the problems that might create for HDFC, is almost the same as what we checked before, which was business ethics, human capital, because they have a lot of people under their wing, corporate governance issues, and also ESG integration in respect to its financials. Are they doing enough CSR? Are they spending more money to do this? Their controversy level here is moderate. It's at 2. It's not 1, it's at 2. And here the problem is the contributing event for this controversy is basically the society and community incidents that they're facing with respect to societal impact of their products. Is it actually helping the society, the products that they create, or is it just to make money? So that is something that they're looking at as well. If you look at their financial ratios, HDFC is a 4,28,000 market cap company, very big, P ratio of 24.49, operating profit margin of 38.68, and a 1 year return of 37.86. So guys, that was a wealth of information that you got with respect to how ESG works in India. Now, I hope you understood the basic concept of why ESG was implemented. We need to understand that how every large cap company or how every company in India works with respect to the environment, with respect to its social causes, and with respect to how they govern their entire company. Any problem here which can create a controversy for them will make the stock price go down, and that will impact me and you directly. So that is why it is important to look at how ESG elements play into this picture. Now, you can go do your own research about ESG, but there was a lot of information in this video that might help you understand or even start off how ESG is implemented in India and what are the different type of companies and how ESG score is analyzed. That is also something that you have understood. Again, we'll keep giving you such amazing knowledge, great knowledge, value-packed knowledge to you guys. All we ask in return is like, share, subscribe, and comment below. And I hope you like this video, guys. We will keep coming out with more such amazing value bombs soon. Hey guys, just a disclaimer. Everything shown in this video, all the stocks, all the funds, anything shown in this video is only for educational purposes. We do not recommend any buy or sell on any of these stocks or funds. Okay? I'll see you guys again in the next episode. Till then, Shashank Gurpa signing off.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.